We want to bring in Sam Hendel, who's the president of Levin Easterly Partners. We're also joined by Bill Baruch, president of Blue Line Futures. Bill, let me go to you first, just in terms of, you can see obviously how important stimulus talks are to the market today. We can see that flipping the Dow from negative territory back into positive territory. What's your reading on that, and how optimistic are you that we're going to get a deal done?
Thanks for having me on. I do think that we will have a deal, but the problem is the market is already anticipating it. Now, I am bullish, and I think the path of least resistance is higher for stocks. But one thing, again, what are the market's expectations? And that $2 trillion headline that everybody had for months is now dissipating, and the market's going to have to settle for a bit less. And then when they do get it, is it going to be a buy the rumor, sell the news event? So those are things that are going through my mind when I'm trying to manage risk.
Sam, I'm going to come to you in just a second, but we got to get to Jared because we're literally about 50 seconds to the closing bell. And Jared, you've got your eye on what? Because the markets were negative at first, but they went green about 2 hours ago.
Yeah, broadly constructive action here about average volume, not that much range for the day, just kind of setting up for what most traders and market participants have been projecting to be the Santa Claus rally, broadly extended through the month of December, early January, if history holds here. But we are seeing some weakness in the EV space. Tesla underwater for about 3%. Some of the other stocks in that space have come back. Lee Auto down only 32 basis points right now, had been deeper in the red. NEO up over 5%, XPeng up over 6%. Also taking a look at the semiconductor space. That's been really hot over the last 2 days. Let's just check out that two-day price action. Micron up 8%, Lam Research up nearly 6%. So heading in with some strong names in the tech sphere today. And here's a closing bell, guys.
All right, we are waiting for the markets to settle with the Dow up over 50 points. S&P 500 should settle around up 6 points. NASDAQ, maybe not, off about 5 points. Russell 2000, by the way, is going to settle up about 6 points. And the sectors that were in the green today, we were talking about energy not too long ago, but financials, healthcare, as well as communication services. So let's bring Sam into this, because one of the things that is on everybody's mind is the vaccine and healthcare. But if you're going to make a play with healthcare, would you be better now to go direct to, say, a pharmaceutical stock, or would you might want to look at the airlines and the shipping companies and the cold storage companies that are going to have to transport and get this vaccine to us?
Well, it's a great question, because the healthcare companies, in particular the pharmas, are going to be the ones who are really going to start getting the economy moving again. But it's a situation where they're the ones who are doing it, but the other companies are going to benefit more. They're the cyclical companies. They are the airlines. There's other companies that really have a lot of the juice coming from the world getting back to normal. And I do think that long term, there's going to be a tremendous amount of money that remains within the healthcare sector. And this is sort of what COVID-19 is really what September 11th was for defense and security. The amount of money that's going to go toward vaccines, toward diagnostics, is going to be huge over a long period of time. But in the near term, it's really those cyclicals that we think are going to outperform.
Bill, when it comes to the market, I think there's lots of questions as we see this rise in COVID cases, the jobs report that we're going to get later this week, some saying that we could even potentially see a negative number. How big of a risk do you see this being to the market?
I think in the near term, it's going to help gyrate the market. But overall, I do anticipate a steady recovery in jobs, and that's been a tailwind overall. And what we've in fact seen is better data has actually taken some steam out, or not much steam at all in the dollar, but it's taken the dollar lower. It's been actually a risk on for the market. And that's really what I'll be watching, is how does the dollar react to the jobs report? Because the dollar is really breaking down through some pretty crucial levels. And that's been a tailwind for stocks all year long. It's been the sacrificial lamb, if you will. So I think that's where you want to keep a pulse on, but steady job growth or steady job recovery is really what's going to be important to kind of keep the market satisfied.
Sam, what do you think? Do you agree?
I mean, I do think that in the near term, this is going to be a very choppy period for the economy. But we have, as a stock pickers, we're really looking toward what's going to happen with the distribution of the vaccine, and it's really the long term is what really counts for, in particular for mid cap and large cap stocks that certainly do see the light at the end of the tunnel here. And I think that's going to be our focus is more on really 2021 numbers, 2022, and how quickly we can get the vaccine moving.
Adam, it seems like you are muted, Adam.
Yeah. Sam, what do you think about clean energy?
Got it now? Okay.
As we get out of the pandemic, we're going to have a new administration that's going to be pushing heavy into clean energy. And it seems to me is that for some, I mean, forget Tesla and EV because that's expensive right now, but there are other plays there that are affordable and that you can get in on.
Yeah, I mean, one stock that we really love is General Motors here, that is participating in all the electrification of auto and doesn't have the same multiple that Tesla has. I think I talked about it last time I was on the show, guys. But in general, I think the Biden administration is going to focus on clean energy. It's going to be on renewables. Now, a lot of this was already happening, and you've really seen that in utility land, where the utilities that have the highest multiple are the ones that are the most focused on green, on solar, wind power, battery storage. And I think there's going to be a lot more money that's going to focus on these areas under Biden. The corporates have already been moving in this direction, and now you have the potential for the government to be doing the same thing. And that really does bode well for a real focus on climate change, on clean energy. And there are a lot of stocks that are high flying, but I think there are other companies that don't have the same multiple that also have a value bent. And we're focused on finding those and having that optionality on clean energy.
Bill, we've seen some rotation back into these growth names that have fallen behind over the last couple of weeks. I mean, we see the NASDAQ 100 closing at another record high, S&P back at a record high. Apple was one of the leaders earlier this week, as well as Amazon, Google at a new record today. Do you think some of the rotation here that we thought was maybe going to stick into those value names was a little bit too soon to call?
You know what? I like the value names, and I don't think you need to leave tech on the sidelines. I have really increased my exposure in industrials through October and November, looking for some really good value out of some good balance sheets as the vaccine narrative, or really the new year starts to bring a tailwind to a lot of those stocks. And another thing though is tech is really breaking out. A lot of these. As well, there's going to be higher prices, and there's some really good chart setups. Maybe not the Salesforce breaking down, but Apple, which I like Salesforce a lot still, but Apple has a really good chart setup. So there's some names you can pick and add exposure. Even trade them with some. I bought some call spread options with Apple earlier this week, and I think that's stuff like that. You can look at riding tailwinds, riding some strength where this market is. Because I think we are trending higher, but you're also using options to define some of your risk when you're adding that exposure.
All right, Bill Baruch, great to have you back on the show. President of Blue Line Futures, Sam Hendel, president of Levin Easterly Partners. Thank you both so much for joining the show today.